So today we're going to do test of details. Right. So we know what is SAP. We went through. It is like analytical procedures, but it is more detailed than analytical procedures. And the quality of the audit evidence is better because when you use SAP, if the expectation, right, compared to the recorded amount is within acceptable variance, you do not need to perform any test of details. But to perform SAP, you need to know whether it is suitable or not. So to know whether it's suitable, first, right, the population must be homogeneous. The control risk must be low because you need the reliability of the underlying data, right? And the auditor must have checked the controls, right, with respect to the SAP financial and non-financial data. Okay. Now, what's the difference between SAP and test of details? Test of details means the auditor takes the document and check the details in the document. If it is sales invoices, it will check that the sales invoice is accompanied by a delivery order which is acknowledged. Then they check the details in the delivery order as well as also the mathematical accuracy. So that is test of details. So test of details will depend on the type of account being audited and the assertions identified as being at risk. If we are checking occurrence for sales, there must be acknowledged TO. If we are checking occurrence for purchases, there must be the matching of purchase order. There must be a purchase order attached to the goods received note to ensure that whatever is ordered has been received, right? And also acknowledge customers' delivery order. Okay, so you test, right? You check the details, and you can check for test of details. You can check for purchases amount. You can check for revenue. You can check for accounts payable, accounts receivable, right? So that type of test, you can also account for existence. If we have debtors, if the debtors exist, there must be an invoice. So that is for test of details. Now, in this chapter, we're also going to cover external confirmation. So confirmation is to cover existence. So test, sending out confirmation, attending physical count is a test of detail. And we need to also know the direction of the testing. So direction of the testing, if it is vouching, you vouch from the ledger to the physical stock or stock take records. So for vouching, if we check from ledger to the stock records, this is from our ledger to stock record, this is to test existence. So vouching tests existence. Tracing is for completeness. Right. So this is when you check existence, sometimes this is referred to as list to flow in a stock count. When we check completeness, this is tracing. So completeness, this will give us floor to list. In stock count, to check existence, why is it from list to floor is existence? Because whatever is in the list, if you count to what is on the floor, that means the item exists. But if we count from floor to list, it means you have to count 100% on the floor. If you count 100% on the floor, you check it back to the list, that is completeness. So vouching always gives us existence. So you vouch from the accounting records to the source document. Existence is ledger to the source. So test of details, you can be doing vouching or doing tracing. Normally invoices, we will trace from the ledger to the invoices, that is vouching. So the best test is always test of details. And test of details can be used to cover all the assertions for balance sheet items as well as for profit or loss items. So if you look at balance sheet items, if we have debtors, existence is debtors confirmation, completeness, subledger to GL, and rights and obligations, if you trace to the invoice, the debtor exists, then this means the debtor is owned by the entity. Then we have AVA. AVA, we will check for accuracy, means check the mathematical computation in the invoice, check the details in the invoice to the delivery order, and lastly, we perform impairment testing. So test of details can cover these assertions. So let us just go through an example of test of details, normally for debtors. So when you agree, subledger to GL, this will give us existence. So it's existence, rights and obligation, completeness, AVA. Subledger to GL. So number 2, you send debtors confirmation. That is existence. Then rights and obligation also can be confirmed here. AVA, accuracy. Then you select invoices, you agree to acknowledge DO. You also look check details, invoice to DO. You check mathematical accuracy. This will give you AVA. Lastly, you perform impairment testing. This also is AVA. This is more for allowance for expected credit loss. So these are the general steps that we will do so that you address all the assertions here. Right. So these are just some of the steps. But for transaction, where you check revenue, you check purchases, check expenses, the completeness is sequential numbering. When it comes to balances, it is always agreeing subledger to GL. For revenue, because you have to account for completeness of revenue, revenue comes from the invoices. So if all your invoices are, how do we know invoices are all accounted for? You look at the numbering of the invoices. Normally, when you raise invoices in your company, is it sequential order? This is because you want to ensure that you account for all the invoices. Right. So that is an example of test of details. Now, the next step in your study guide, they talk about confirmations, a section on confirmation, because there's a specific standard on confirmation. There's also a specific standard on what to do for attendance at fiscal count.